Hey everyone, electric vehicles had a difficult time in 2023 as increasing supply and competition more than offset the growth in demand from customers for EVs. So in this video, I'm going to look at the total addressable market for EVs. I'm going to compare Ford and Lucid Group and answer which one I think is the better EV stock to buy for 2024 and beyond for investors looking to capitalize on the growth in EVs. So let's get right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So the first metric I wanted to compare Ford and Lucid Group on is revenue. But before we get into revenue, let's look at the total addressable market opportunity for EVs. Total spending on electric vehicles reached $539 billion in 2022. That figure is estimated to reach 907 billion worldwide in 2028. Industry-wide, this spending is supported by trillions in government incentives to support the transition to cleaner energy consumption. Additionally, governments worldwide, to varying degrees, are mandating manufacturers to produce a larger percentage of electric vehicles. Importantly, investors should be aware that without these government incentives, the growth of the EV industry would not be nearly as robust. After all, governments have been known to change their mind, to extend deadlines, and remove mandates altogether. Still, within this backdrop of incentives in play, the companies that are likely to benefit from the expected growth are Tesla, Rivian, NIO, and Lucid Motors. It remains to be seen if legacy automakers like Ford, General Motors, and Stellantis will ultimately benefit from this transition. That being said, let's look at revenue here with Ford and Lucid. Now, these two are in very different situations, with Ford already being a mature company with 174 billion in revenue. That's up from less than 135 billion from a couple of years ago. That's excellent growth from Ford, and that's uncharacteristic growth from Ford, which is typically a flat to low single digit growing company. Lucid Group, meanwhile, is expected to grow meaningfully over the next few years and has experienced significant growth as it has ramped up production, 695 million in the most recent trailing 12-month period. Analysts expect that growth to continue, which we will look at in just a little bit. The next thing I wanted to compare these two on is cash flow from operations. And looking at this metric, you can see Ford generated 13.6 billion in cash flow from operations, while Lucid Group lost 2.66 billion in cash flow from operations in the trailing 12 months. Lucid Group is investing to ramp up its development, to ramp up manufacturing, while Ford is already at scale and its investments are more so to transition to a greater percentage of its production being EVs versus traditional internal combustion engine. But management said they're going to pace that investment, that transition, based on customer demand. So if customer demand is not strong, then they won't invest as aggressively to the transition. That gives Ford stock investors a bit of risk protection because they can have it both ways here. If internal combustion engine demand remains strong, they can keep producing those at a greater percentage for a little bit longer while slowly investing in EVs. However, if EV demand grows exponentially, they can shift production and they can increase capacity for EVs. And so they're kind of doing it in a more prudent manner, growing more prudently, whereas Lucid is completely dependent on EVs, right? They bet the whole business model on EVs, and I'm not saying that's a bad thing. It's just completely dependent on the growth in EVs, which demand from customers for EVs is growing. But the problem in 23 was that the supply and the competition was growing much faster than customer demand, which led to the widely publicized price cutting wars in 2023. Hopefully, 2024 will be a better year for EVs. Now let's look at the prospects for these two over the next 2 years. For Lucid Group, analysts expect phenomenal growth from 630 million in revenue up to 1.4 billion in revenue in 2024, then up again to 3.74 billion in revenue in 2025. Analysts also expect these growing revenues to shrink the losses on the bottom line, falling from $1.34 a share to $1.06 to 78 cents a share in 2025. Part of that will be due to shareholder dilution, which I will also discuss a little bit later. Ford, meanwhile, is expected to grow at 4% in 2024 and to decrease revenue by 1% in 2025. I highlighted that Ford will not be a fast-growing company. Low single digits is just about what investors can expect in the long run. Analysts expect rising costs to hurt profitability in 2024 and 2025, with earnings per share decreasing by 6% and 1.6% respectively. Looking at operating income, you can see a tale of two different stories here, with Ford's operating profitability rising over the last 3 years, while Lucid Group is going in the opposite direction. For the reasons we talked about, they still need to invest to ramp up capacity, to ramp up scale before they can be profitable. And before they can demonstrate that, they've got to make more production, sell more cars. But that's the risky part with Lucid. There is no guarantee that when they ramp up that they will have enough sales to meet and achieve profit expansion. Management already said that 2023, they had capacity to produce more. In fact, they had to scale back production from initial plans because customer demand wasn't there. So it may or may not come to fruition. That's the riskiness with Lucid. They've made these investments without knowing if customer demand will be there for them to sell those cars. I also wanted to look at shareholder dilution, average diluted shares outstanding. The number of shares outstanding is an important financial metric. If a company issues more stock because it is running out of money or it wants to invest in a new growth project, it has the potential to decrease your earnings per share. Look up here, when I have a net income of 1,000 and shares outstanding of 100, my earnings per share is 10. You take the net income divided by shares outstanding and you get 10. But now let's say you increase your shares outstanding to 200 and you have the same net income of 1,000. Now your earnings per share is just 5. The same is true in the opposite direction. If a company is losing money on the bottom line and it issues more shares, it spreads out the losses across more shares, thereby reducing the loss per share, which is a tricky way to reduce the loss per share. Look at this point here. A net loss of 1,000 with 100 shares outstanding creates a loss per share of 10. But if you take that same net loss of 1,000 and you spread it across more shares, 200 shares, you now have a net loss per share of just 5. So it's a tricky accounting trick to get your losses reduced on earnings per share. So you want to take a closer look to see where the improvement in the loss per share is coming from. That being said, you can see Ford shares outstanding relatively flat at 4 billion, while Lucid is diluting shareholders meaningfully. That's where it's getting most of the money to invest in ramping up capacity, growing from around 1.6 billion shares up to 2.3 billion shares outstanding. Finally, I wanted to compare the two on valuation, and I chose to use the forward price to sales ratio. And according to this metric, you can see Lucid Group is almost 10 times as expensive as Ford at 2.35 compared to 0.266. And while I would be willing to pay a higher price for Lucid, I feel like a 10x premium or a near 10x premium is a little too much, especially with all the risks surrounding Lucid and the uncertainty about customer demand. So for now, if I had to pick today which one would be the better EV stock to buy, I would go with Ford. But I wouldn't be surprised if over the next 6 months, if Lucid Group makes the progress I'm expecting it to make, if I change this over and choose Lucid over Ford, given its much better growth prospects going forward. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.